When she walks, watch, the sparks will fly. Fire cracking on the 4th of July. No sad songs.
Welcome back to the Stockwell Eldridge Show. I'm Jason Stockwell with RE/MAX Results.
I'm Dawn Eldridge with RE/MAX Results. We're having a little too much fun between sets here.
Yeah, I think everybody's getting ready for the 4th of July or something like that. There might be a lot of fireworks going off soon.
I still love Nate, though, even though he told me it caused all these problems. I don't take responsibility for anything.
You're such a troublemaker.
So we have Stephanie Havel with Wells Fargo here.
Good morning.
We have Nate Nelson here. Messerly
and Kramer.
and Kramer. I did it. I nailed it right there. Messerly
did.
and Kramer. Talking about setting up proper LLC. Now, Nate, we left with you saying for every property you have, you should put it into a separate LLC to maximize your liabilities. Okay, you're going to have a separate bank account for all of those. You're going to have a separate tax return for all of those. Lot of work. Now,
Not if you have an accountant, though. They can just take care of it.
In the practical world, I'll say what I see out there more commonly is that they're bundled a little bit. So let's say you're fortunate enough and you have 30 rentals. You may have, 5 LLCs, clumping certain ones into each LLC, knowing that, yes, those all are potentially at risk in there. But, however, guess what? You're smart. You have homeowners insurance on all of these as well. You have an umbrella policy that covers as well that would kick in. And you have a good lease that's solid on it. And you have renter's insurance for your renters. So you have all those things in place that might be able to offset a lot of that liability if you have more than one asset in there. Nate, where did I go wrong with that?
You didn't. You identified the risk that 5 are at play as opposed to 1 being at play if it goes to litigation. But what you've also done, though, is if you actually do have 30 rental properties, you may have different groups of partners, and it might be simple to bundle one partner group into one LLC and another partner group into another LLC. Also, you may have a sizable estate and you want to start gifting. And
or 1031 exchanging. I see that happening now a lot. Yeah.
1031 exchanging. So it's just a different set of bundling. I still think it's better than having it all in one LLC own 30 of those. And I guess, Dawn, the quick take on the separate tax returns. If you're the only owner, the LLC itself won't pay a tax, won't have to file a tax return because it's a disregarded entity for IRS purposes. However, a single member LLC is a disregarded entity. It doesn't pay tax. If you have a whole bunch of different owners, you could put Dawn's 30 interests all under one master LLC. So all those LLCs would flow into your holding LLC, and again, we could structure it properly, like how Stephanie said.
So call Nate if you want to buy.
We're gonna have Nate's information on our Facebook page because there's a lot. You can get a lot into this, but it's all for protection. It takes one bad thing and it can totally devastate and wipe out an entire portfolio.
I hate the word oofda.
Yeah,
It would destroy.
And the other thing I learned recently too is your umbrella policy. Many people out there, you probably listen, you have an umbrella. Yeah, I got an umbrella. Yeah, I got an umbrella. Yeah, I got an umbrella. Here's the deal. If you don't indicate specifically properties to be placed specifically in real estate to be placed in the umbrella separately, they will not automatically fall into your umbrella. So you have to, so your umbrella cost maybe $300 a year, but you're like, oh, that's not bad, or $250 a year for $1 million policy. But it's going to go up because if you have a bunch of rental property, you have to give every address and say, I want this address added as a rider in my umbrella to be also covered. It's not naturally default automatically covered. So my umbrella is like $1,300 a year because I put the properties in there when they're not automatically in there. And so if you're thinking they are, just talk to your insurance agent. Call Ben Nelson. He works with me with farmers, and he's the one who's awesome on this. So from a financing perspective, Stephanie, what do you guys got to say at Wells Fargo besides pay your mortgage so you don't go into default and get foreclosed on?
Right. Well, if we're talking investment properties, industry standard is 20 to 25% down, and then some reserve requirements depending on how many properties you own and so forth. But
and someone told me 10 is the max. Is that the rule? If you're doing a Freddie Mac Fannie Mae financing on properties, you can do 10 max rental properties. Is that right?
Yeah, just check with your lender because there's a lot of guidelines that vary depending on, same thing, types of properties and the ownership type that they're in. and everything like that. But yeah, there are guidelines and restrictions on the amount of properties you can own, whether they're financed versus owned and all that kind of stuff. So yeah, just, give me a call, 612-940-7335, and we can get you connected with somebody that we've got a lot of specialists on my team and somebody that deals with a lot of investment properties. But there's
what
great
if
opportunities.
you're out there thinking, well, I'm going to buy this duplex. I see a lot of smart people doing that right now, and then rent out the other half and live in the other half.
Yeah, we can do that
That's a primary, right?
Yeah, absolutely. And I was going to say, we see a lot of, like you said, these young millennials, they're getting smart. They're buying a duplex and using one half as their primary residence and renting out the other half. And so that is a primary residence versus a rental. And like you said, Dawn, maybe somewhere down the line, they do build up the equity in that, or, maybe they buy it as a single person and then, they get married and then they turn that into a rental and move on.
Yeah,
to
what
a
if they
different
move
place.
out? What if they move out of that?
Yeah, they still can turn, again, it goes back to notifying your lender. So if you originally buy it as a primary residence and then, 5-6 years down the road, you move to another property, you just want to notify Wells Fargo that now is an investment property versus it's not owner occupied versus owner occupied. And if you're changing the title or the
name of it into an LLC,
how
right?
it's held
Yeah.
in title versus an LLC, definitely call Nate.
Dawn, do you have a rental properties?
I do. I have a duplex, and actually, I bought it with a friend in 1999. And
Really?
Yep.
Cool. Hey, Are
Yeah.
you in the partnership then? Like Nate was talking about? No?
No,
Okay.
he actually quick claim deeded his interest out. So, but it is a Freddie Mac loan. So I would not be able to put it into an LLC unless I refinanced it, correct?
That's right. So you're going to want to seek, Dawn, on more insurance and more burden on the tenant.
And I
you choose.
did.
And I guess to Stephanie's point too, of that change of from when you left the duplex or the prior home and then turned it into a residential, to piggyback off of Jason's point, it would be another time to notify your insurance.
Yeah, and the cool thing about my duplex is it didn't cash flow for a long time. And then I refinanced it through the HARP. And I went down 2% in the rate. I was shocked that I was able to do it because I've heard a lot of people that weren't able to do it. And now it finally cash flows.
Well, my
I was
question.
going to say, real quick,
Brilliant.
that good point, though, a little bit off the subject, you mentioned HARP. If the Home Affordable Refinance Program, it is set to end December of 2016. We've had
It's
it for,
ending this year, 6 months from
It
now?
is.
Wow.
They kept telling us, 2011, 12, 13, 14.
Folks,
but
if you
they've
need
made
help
a
in
hard
that,
line.
I don't know the rules on that, but Stephanie does. Find her on our Facebook page. Call her, Stephanie Havel.
Yes.
HARP is still going to be ending, so you should do that.
Wow.
Question for Nate on rentals. A lot of tenants pay cash or end up paying cash. Any issues with that from a landlord standpoint as long as you're claiming it as income?
No, again, it just from the cash is always good, except it's hard to trace. So again, it should be contributed into if you use an LLC, into the LLC's bank account, so there's still at least a record of the deposit.
Okay, perfect. And then the other legwork, I work with Vanquish AP a lot for property management. They're on the show here. They're a partner of the show. They are phenomenal at property management. That's what they do. Two smart kids from St. Cloud State. They have a software. They have an app. It's all run for you. You can see your percentage. You can see your return. You can know when your taxes go up. It's on a graph. It tells you exactly your rate of return down to the hundredth or thousandth of a decimal percent on it. And great guys. I would highly recommend Vanquish AP. And their leases are great, and their renewals and their management and all that stuff is wonderful. So
Jason, LLC with a property management company, and there's
insurance.
And insurance and sleep well at night.
Yeah,
It's
I
a
love
win-win
it.
situation. Yeah,
Yep.
I can't imagine. I had one rental property and I sold it. I can't imagine having it without a property manager. Mine was a townhome, so it was a little less. I didn't have to deal with the lawnmower and the shoveling and all those kinds
It's
of
still
things.
good to have
but-
them. They're worth their money. Just like a good agent is worth their money, a good loan officer, so is a good lawyer, and so is a good property manager.
And good realtor.
Yes.
Don't sell yourself short.
Yes, and a good realtor, yes. So Stephanie Havel,
Never
Wells Fargo, thanks so much.
Thank you for having me.
Nate Nelson, thanks so much. You'll find everybody's information on our Facebook page.
My pleasure.
I'm Jason Stockwell with Remax Results.
I'm Dawn Eldridge with Remax Results. Happy 4th of July, everybody.
Yes, rock and
Woo,
roll,
let the
drink some
fireworks
beers,
roll.
have some fireworks, have some barbecue.
Careful
And
with
buy
the
a
fireworks.
house. Celebrate your independence.
And buy an investment property. It's the American way. No. Remember, love yourself and love others. Happy 4th.
Our house, it has a crown.